Yeah. All right. Well, I think we could get started. I think people are going to keep trickling in as we go, but we want to welcome John Wines, Chief Strategy Officer at Atlantic Bay Mortgage, and John Hardesty, SVP of Revenue at Argyle, with us today. Thank you for joining us. I hear you guys going to share with us how lenders are transforming verification workflows.
Absolutely.
That's the
Look forward
plan.
to it.
We hope so. All
Yeah.
Great. Take it away.
right, cool. Well, thanks Mimi and TMC for putting this on, and thanks for the folks that are joining. Really excited to dive into a topic with John. You have the two Johns on. That's going to keep throwing me off, John Wines. Um, that I think you'll hear a story of evolution. John and I go back now 3 or 4 years, but what we're going to talk about today is how folks are taking that digital first strategy. I'm going to pick John's brain on a few hot topics. And then I will say this once, probably twice, but please put your questions in the chat. Would love to answer them at the tail end of our time together. So with that, I'm going to share a quick deck and let's dive in. Here we go. John Wines, can you see this okay? Am I
See it.
presenting well?
So,
All right, perfect. So let's look at the agenda. Loaded agenda. We're going to talk about the evolving verification landscape, why lenders are rethinking not just their manual verification workflows, but across just how they're verifying income and employment and assets across their workflow. How Atlantic Bay took that, again, modern verification experience, look at some results, and then talk about the unification of these experiences and kind of our philosophy that I'll pick John's brain on in terms of VOA, VOIE, and docs. So with that, let's get going. So John, I think back to, let's take a step back 3 years ago, right? You're not familiar with Argyle, but there had to have been something that Atlantic Bay was facing at the time that really began to bring a challenge to the organization and where you started to look for a solution. So I have a few points here, but I'm just like at a high level, someone in your chair, like what was happening in your organization that really got you thinking, hey, I need to look for alternatives here.
yeah, absolutely. I'd probably say a few things. The first would be, we meet with Fannie and Freddie on a regular basis, and we meet with their tech team and things along those lines, and you can see how much they were talking about it. And I'm a big fan of swimming, with the current, not against the current. And the more that they talked about it, the more I realized, we need to be on this boat here. I mean, if we don't, we're gonna be, falling behind. So I'd say the first part was just listening to Fannie and Freddie and just seeing the direction they were going and getting our roadmap in alignment with their roadmap. The second piece of it was the astronomical costs of verification of employments that we were paying out every single month. And that verification number on the invoice just kept growing and growing, and it wasn't slowing down. So we needed to try to find alternative ways to do it. And then I'd say finally, if you look at it from the borrower experience, and I've originated longer than I've done anything else in my life, and the borrower starts to expect these things. If you think about like the borrower's like life cycle of, being financially responsible, you go online, you apply for a credit card, bam, you're approved, you got a credit card. You want to buy a car, you go in, you apply for the car, you've got a car. Nobody really prepares you for the fact that when you're trying to buy your first home, it's a lot of paperwork, and you're digging through filing cabinets to find pay stubs and W-2s and all the other things just isn't really in line with the other borrowing experiences that you have. So I'd say that was kind of the final component of it, was just trying to modernize the experience to make it fall more in line with what I believe borrowers going to start to expect. They're not going to be quite as satisfied going through filing cabinets or trying to download things and upload them.
Yeah, and I remember, John, one of our first conversations, again, this was a couple of years ago, market was tough, right? I think another thing that we talked about was how do you guys stay and continue to stay competitive from a speed perspective, right? Can you increase speed as volume was down? How can you qualify faster without adding the additional cost that was out there at the time, right? So, and why I start there is I still think the majority of the mortgage landscape feels that same pain. Like Argyle, we've been around a while now, but there's still opportunity. And I think starting there, we're going to get to ways that you can really enhance and really solve that challenge. So, um, okay, so let's talk about the shift. You know, it's clear, like you mentioned, over the last couple of years, agencies, Fannie, Freddie, are doubling down on these consumer permission tools, right? It's clear that I would say consumers. I mean, if I look at your guys' conversion rates with our platform, consumers are getting more comfortable sharing their income and employment credentials and asset credentials. I mean, you guys are upwards of almost 60%, right, of consumers doing this, which is phenomenal. Um, but I guess there's a two-pronged question here for you because I think it's important for everyone to hear. What got you guys comfortable not only leveraging Argyle, but the second piece is for our listeners, Atlantic Bay is a Encino point of sale shop, a Byte LOS shop. You also got comfortable putting the service in the point of sale on every wage earner consumer that comes through the flow. And I think that's still a really highly debated question of like sunk costs,
Right.
right? And you and your leadership group got comfortable with that. So loaded question, but I really want that to kind of come through on our convo today.
Yeah, I mean, look, not so low. I mean, look, and it's funny. I love and appreciate the fact that you actually invited me to be on this webinar because I was probably one of the biggest, skeptics about putting it in the loan application. It's funny. I mean, we had other people at Atlantic Bay that were far more passionate and far more convinced from day one that it needed to be in the loan application than me. I wrestled with that one for a long time, and I'll give a shout out to Chrissy Brown, our operations manager, that our chief operating officer, that she was passionate about it from day one that it should be in the loan application. And I wrestled, should it be a dynamic task afterwards? Should it be in the loan app? And I'm so glad that we worked together. We found some good language and things like that to put in the loan application. But the reality is that sure, we could have not put it in the loan application, but what we found were that all these borrowers that were pre-qualifying, we had so many loan officers emailing our verifications desk to pull a far more expensive verification of employment manually after loan application, and the cost of that was way higher than what it was going to be to put Argyle into our loan application and have them manually pull it themselves. So it was something I debated for a long time, and I didn't want to, the concerns I had was partially cost, but I was also concerned about abandon rates in the loan application. I was like, just get them through the loan app, don't let them abandon it and go, have to go find their payroll credentials. And I was really worried about that it was going to slow down the application and reduce the number of people that completed the loan app. We found that hasn't been the case at all. What we found is that we've actually had borrowers embracing it. Our loan officers have embraced it, which is the most important part for us. I mean, if they embrace it, they can get the borrower to embrace it. So yeah, I'll give Chrissy a huge shout out on this one and Julie on our team as well for really being passionate about putting it in the loan app, and it's been a huge success.
And I know, John, one thing that we've talked a lot about even before we got it an app was uh, production staff LO adoption,
Yeah.
right? How do you get someone to adopt this? And at Argyle, you've heard me talk about we try to train to the persona, right?
Mhm.
What is the loan officer seeing in Encino if they get the call from the borrower? If it's post app, what's the operations folks need to walk the consumer through? But what's your take on how do you get loan officers to adopt Argyle, but like technology? Like that's where your specialty is. You used to produce yourself. So like any advice to those folks listening on how to get folks to buy into the technology that you guys are purchasing?
100%. Yeah. So I think that the first thing I would say is that we did a great job of training our operations staff because it does no good. Like if the borrower connects to their assets and there's a direct deposit in there and you run it through LPA and you get, accepts the income based off of a direct deposit, you can't have the underwriters then stipping for pay stubs and W-2s because they just are more comfortable seeing, like they want to see it and have it. You've got to get them to trust the process. So again, Chrissy and Julie did a great job in our underwriting managers of training the ops team to make sure that they weren't conditioning things that they didn't need to. I think that's the first part. The second part was letting loan officers see what the borrower experience actually looks like. So we created a lot of training videos to show the loan officers what the borrower sees. So when they do go into the income stage and they do try to click on Argyle or they do go into the asset screen, they try to connect to their asset accounts, that they know what the borrower is experiencing. They see that the process is not that scary and it's not that bad. And then the third part was really encouraging our loan officers to adjust their scripts a little bit. When I was originating, I used to have the things I'd tell the borrower ahead of time. You're going to get a bunch of stuff in the mail. You can disregard if it doesn't come from me. Like I gave them a lot of things about what they need to look out for. So now we just want the scripts to include parts about when you go to apply for your loan, just make sure you got your payroll credentials, make sure you've got your bank credentials. We're going to encourage you to connect to all of them. That's just going to make the process quicker and easier for you. In addition to that, we went and since we are with Encino, we were able to do we did our own custom loan application. And the main reason was when we got to this page, we wanted customized language that really encouraged borrowers to connect to this and let them know for a faster, more streamlined experience, please connect to your income and assets. But if not, you can go ahead and enter it manually. So we wanted it to be a choice, but we wanted to be a choice where they saw the benefit of doing it. And I just believe all those things combined has really made a world of difference. And the loan officers who I really thought were going to reject this and not really embrace it. We have presidents and chairmen's club like teams roundtables, and we have meetings. When they started talking about the success that they've been having, that's when it really started to come to life for them. In addition to that, you can go into Fannie Mae's websites and you can see loans where the borrower got an approve eligible because they connected to their asset account and it was able to find a rental history. And that rental history flipped it from refer to approve eligible. And you better believe I go into that report. And if I see something that flipped, I go tell the loan officer, hey, that loan that you had that had the 580 credit score and the 49% debt to income ratio? You got an approve eligible because you had the borrower connect to their assets. It found a rental payment history and that was good enough to flip it. And those kind of things where you start celebrating the wins really helped us get a lot of adoption on the sales side.
I think that's key. Celebrating the wins. We always talk about how do we create internal champions. And with you guys, what started in processing, right, that really got them to see the value of the platform was a little win. And then we betaed in Encino, a couple loan
Mhm.
officers, win, right? And then you have internal champions, which drives adoption, which drives scale. And I think you guys put on a master class of really how to do that. So I think clearly you took a problem, you shifted, and now let's talk about, the next slide here, which is what were the results? And um, there's a lot on here. I'll just start by saying, of course, we're known in the industry for saving folks a lot of money. I'll let John talk about that. But there's also this net promoter score that I'm super proud of because I do think that's another really highly debated piece of any consumer permission tool. Oh, it's going to cause fallout. Oh, they're going to go take their loan somewhere else because they have to do the digital experience. So I'll stop talking. John, talk to us about the results.
Absolutely. So that was the big thing for me. I believed in the tool. I believed in the process of having borrowers connect. But what I wanted to be able to show the loan officers was that don't just take it from me who's got I've got something to gain from this. Listen to your own borrowers. And what we did is we have a ton of Power BI reports that we rely on and that we're constantly looking at. And one of them's it was Simple Nexus. Now it's an Encino report that also tracks our Argyle statistics and things like that. The borrowers are connected to income and assets along the way. And we have a lot of different statistics that go along with those connections. And what we found was that the net promoter score that we've always had a high net promoter score is that the score was just as high, if actually it was 1 point higher for loans where the borrower did connect to Argyle versus the ones that did not connect to Argyle. So we were able to take that information and go back to sales and say, look, they're not upset with the experience. If you're hesitant because of it, that's a you thing. It's not a borrower thing because the borrowers are clearly saying that they're not upset by it. They're having just as good of an experience, if not a little better experience connecting to these tools. And I think that got some of the final naysayers off the fence a little bit that said that my borrowers aren't going to want to do this and it's a problem and it's too confusing and whatever the case may be. We were able to show them with numbers where we had no influence over them. It just they were what they were. We don't control what the borrower puts on the net promoter score. And that's that was eye-opening as well, just from a net promoter score part. The savings, the number that you see here is annualized, but Just last quarter, I mean, just last quarter, you're talking about January, February, March, not the best months of the year, but for the first 3 months of the year, we were able to save, a quarter of that number in loans where the borrower connected to Argyle. So therefore, we did not need to run a more expensive verification of employment tool. And so we looked at the loans where they connected to Argyle, but we did not need to run a more expensive tool. And the savings are staggering. I mean, when you look at a number that's the first quarter annualized, but if you think that it's probably going to be higher because the second two quarters are higher, you're looking at a number that's over $1 million a year in savings, which is certainly another win for the organization. On top of the efficiencies you gain, the reps and warrants or day one certainty, all the other things that you have as benefits, that's just a straight cost benefit of not having to run more expensive verification tools.
Yeah, and I think John, I mean, look, like from the Argyle side, when we can, deliver on the promise, right? The ROI, these are two metrics that we're proud of. That like you trusted us for this critical piece of your business, and we're delivering, and we have to continue to deliver, of course. I'm curious your take on, you've mentioned a few times how important the rep and warrant relief is. I know don't need any hard stats here, but from what you're seeing Argyle data versus others you've seen. Are you seeing the efficiencies and the positive results on those AUS runs that you mentioned earlier?
Absolutely. My focus is more on the front end. So like kind of taking that
Yeah.
from the sales perspective. So I mean, Chrissy and our team would talk to the operations side a lot, but what I'll tell you is that was one of the biggest things when we first started going down this road. I mean, you can go into Fannie and Freddie sites and you can see the loans where the borrowers have connected, where you have gotten the asset and income relief and things like that. And I was digging into that stuff. I was obsessed with it early on to find out like if they connected but we didn't get it, why didn't we get it? And which ones, where was it flipping where the assets were helping us with direct deposit or flipping over with the rental payment history. So there's a lot of great information with Fannie and Freddie that you can dig into to find out like, where are you winning? And then to what we were talking about before, go back and celebrate those wins, point them out, tell them to the loan officers and say, look, this one, your borrower didn't have to get pay stubs and W-2s because they did this. Like, how much cooler is that? And it really does start to paint the picture for them that this is, we have modernized the loan process and it's not the old school back and forth. And then, kind of a even bigger part is updating income and assets along the way. I mean, we talk about the initial doc load, but there's nothing worse than having to go back to the borrower and say, hey, your pay stub's out of date or your bank statement's out of date. We need you to send us a new one. So now you can just, refresh these reports. And that's another huge win as well. So just the savings, the efficiencies, I mean, it's a no-brainer really. And I would encourage anybody and everyone to really go all in on this.
Awesome. Awesome. Well, just to shift, so problem, solution, results. I want to move to one other kind of concept that we spent a lot of time at Argyle on, and I want to pick your brain on it. And it's that I think 3 years ago we would have said myself, hey, forward-thinking lenders are moving to Argyle's payroll solution. I think it's evolved, and
Hmm.
as the market has continued to do what it's doing, you need to be diversified, in my opinion, as a partner, as a vendor, right? And how it's one workflow, multiple options. But I think what's important is in that one option, you're sticking with the ethos of who you are, right? We want to save people costs. We want them to become more efficient and get rep and warrant relief. And that means VOI, you've mentioned VOA, some doc work that we're doing. But I guess you probably know, just as others do, managing multiple vendors,
Hmm.
multiple contracts, et cetera. What what would you say to those listening about how you should be thinking about your vendors, and also what you should be looking for in a vendor that's offering these types of services?
That's a great question. I mean, we've gone through a couple different ones over the years. I mean, honestly, I mean, we have, and I would even say now it's not even forward-thinking lenders are moving. I think if you're a lender, you should probably be doing this by now. I think you need to be because it was forward-thinking. Now I think it's just starting to become the way. And as far as vendors go, I mean, for us, it was a total effort. It was, I mean, operations. We wanted to see from their standpoint, from like the 10-day verbal and the upfront part, how easy is it for borrowers to connect to these things? I mean, all the user interfaces are a little bit different. And what are the connection rates? What employers are on there? If you're a VA lender, or if you're in a VA market, I mean, there's a lot of things that we put into the decision, and it wasn't just a technology decision. It wasn't just an operations decision. We put our project management team on this. We evaluated several different lenders and went with the one that was best for us when we put all the criteria. I mean, literally came up with an Excel spreadsheet that had a list of all the things that were important to us and what did we need to do. And then we started stacking them all together. One would get a check, the other one wouldn't. And we kind of compared the two, or the multiple options to pick the winner. And, that's where Argyle landed on top, especially for the
Yeah.
income validation.
Like you do travel a lot, and I feel like, and we might have to get into it a little bit, but the AI movement in mortgage, you go to these conferences and there's new AI tools everywhere. A little off script here, but how are you thinking about that space in general? Maybe what are the key questions that you're asking folks in the AI space? Just because every conference, it's like there's a new one popping up. So I just wanted to get your take on that.
Yeah, I mean, I think that obviously it's important, and I mean, we say AI, I mean, it's so many different facets to it. I mean, there's the AI underwriting. We've been looking at gate lists and things along those lines for, taking the documents that we have and having a AI tool actually reviewing and conditioning out loans and things like that. And again, something that made everyone a little uncomfortable at first, and now people are starting to be like, wow, that's actually pretty cool. There's AI to get intelligence out of your data. I mean, we've had data that we've just been sitting on for years, and we've had a ton of Power BI reports. That's great, but you have to know what you're looking for and go in and specifically try to find it. With AI now, you can start pulling insights out of your data that you didn't even think about. So there's the Gen AIs if you want to write a social media post. I mean, I think it's creating efficiencies everywhere. You just have to have an open mind and start looking at all of the different areas where you believe it could be a benefit to the organization. And there's not a department in this company that we're not looking at how AI can, improve that. And from a, company perspective, we feel like we've got some employed some really, really good people. I love the people that work at Atlantic Bay. So we're not looking at AI to figure out how we can get rid of half of them. We want to figure out how AI can help make these amazing people even more productive. I mean, we're not looking to stand still on volume. We're looking to grow our volume aggressively over the next several years. And if we can do it with similar headcounts, but a lot more efficiency to allow us to get to that higher volume number with the same number of people, we all win. And that's ultimately what we're trying to do. And that's where we feel like AI can play a huge part of our future in that regard.
Seems like if you need an AI consultant, John Wines is your guy. Uh,
You got guys much smarter than me. I can promise you that.
okay, well, it looks like we've got about 6 minutes left. We do have a few questions. So we're going to fast forward here. Kind of talked about this. Let's look at the chat. Okay. So here's a question, John. As you were evaluating the consumer permission product landscape, what ultimately led you to select Argyle? Like, what were some of the things that stuck out about us? Really gets to their question. So, why'd you
Yeah,
pick us back in the day?
I like you the most. Uh, Oh, no, I think, like I said, it's been a few years now actually since we did it, but at the time we were really trying to figure out what direction we wanted to go. We knew we needed to get into the income, the borrower credential tools on the income side of things, and we were already a little bit into the assets. And a lot of that criteria, again, we looked at the whole picture of the lenders, or I'm sorry, the employers that you could connect to. We looked at the like refresh reports. We looked at the cost. We looked at a lot of different things. Obviously we're working with Encino, so we had to make sure it was something that integrated with Encino. We're on Byte, so we were looking for something even though I don't think you guys were integrated with Byte at the time, you are now. We were able to create some actually really cool workflows out of Byte. We created a borrower facing video. So if the borrower didn't connect during the loan application, we had a process afterwards to email them a link to validate their employment. We created this cool little borrower facing video showing them how to do it. And I just ultimately at the end of the day, Argyle checked the most number of boxes on our wish list of what we wanted out of a uh, borrow or a payroll provider.
Perfect. The other question in here is what LOSs and POSs do you guys integrate with? That's for me. We're across the board. I'm happy to talk offline about that, but from Encompass to Encino to Byte to Lotusoft, Tidal Wave, basically everyone that's out there in the point of sale and LOS space, we're either talking with or currently integrating with. Um, Last question here. What was the hardest? What was the hardest part of getting your production staff to adopt Argyle?
Mhm. Probably getting me to adopt Argyle, because I was the biggest skeptic there was in terms of, I mean, John, you know how many times did I beat you up about the less than 2 years of employment history? That would, to me, like I'm so OCD about this process and I'm so anxious about borrowers abandoning the loan application that the loan officers didn't even get a chance to pick holes in it before I'd already tried to knock them in there first. And yeah, I'll use like the 2 year of employment history as a concern of mine when, and John knows I was beating this drum for a minute of I was seeing inside the point of sale, if the borrower connected to their employer but didn't have 2 years of employment history, it was just shuffling you to the next part of the loan application. So we'd have 6 months. The borrower didn't, put in the rest. And, I'll give all the credit in the world to Argyle and to, Encino. And then also another shout out to Chrissy Brown. I mean, what we did was we worked on customized language inside the point of sale that said, if you have not been at your employer for more than 2 years, click here, and it took them into the manual part of just manually entering the information. If you've been here for more than 2 years, click here, and it took you into the borrow credential side of things. So, yeah, I really do appreciate what Argyle, and again, I'll throw Encino in there as well, have done to help us really overcome some of the challenges. But yeah, we had them for sure. And again, going back to John's earlier question about putting it in the loan application or not. There's part of that, like, oh boy, that's going to cost money every time a borrower connects it. And it turns out that that number did not touch the savings that we were having by having more borrowers that had the or the income and asset credentials as opposed to ones who were manually ordering more expensive verification tools.
Great. Look at that. Right on time. Right on
Uh,
time. So Mimi, I'll pass it back to you. But again, John, thank you so much for joining, telling your story. And again, TMC, Mimi and team, thanks for allowing us to come in and get involved. We appreciate
no
it.
problem. Appreciate you guys having
Thank
me.
you. We appreciate y'all sharing your experience with us today. If you guys have any questions, John's information is on the screen. Please feel free to reach out to him directly, or you can reach out to your TMC rep. We'd be happy to connect you guys as well. Have a great afternoon, everyone. Thank you.
Good. See you guys.